Phil Barrar, founder and CEO of Moka. I want to learn about Moka. I guess you've got a couple of big financial institutions in there as investors, Desjardins and National Bank. You're a tool that helps Canadians from all walks of life to better achieve their financial goals. Tell me a bit about the value you're delivering to Canadians.
Yeah, absolutely. It's a pleasure to be here and excited to be talking to you about how Moka is helping Canadians ultimately achieve their financial goals. When you think about Canadians in finance, typically, we're all worried about the number in our bank account, but at the end of the day, the number in our bank account empowers us to be able to do things like moving out of our parents' house, getting married, or having kids. It's all about those life goals, taking that vacation you want to take, or being able to go and add the addition onto the house that you want to be able to do. And essentially, that's what we're trying to put into a product, is this idea that Canadians need help achieving those financial goals and be able to accelerate towards being able to do that. And we wanted to use a technology platform to be able to make that happen. So we created Moka, the saving and investing application that connects directly to your existing bank accounts. Every time you make a purchase through your existing credit or debit card, Moka rounds that purchase up to the nearest dollar, takes that for a change, and puts it into a fully managed investment account for you. So this idea that saving and investing can be effortless and easy and integrated into your everyday life without a change in behavior is helping close to 1 million Canadians who've downloaded the application save and invest effortlessly through that process.
That's fantastic. So you're almost at 1 million engaged, but I mean, the idea that pennies can end up providing a foundation to achieving goals, right?
Yeah, so I did some customer discovery before starting the company, and I found one of the most important things is 53% of Canadian millennials have less than $1,000 in the bank account, regardless of how much money they make. So they could be making $30,000 a year or $100,000 a year. They're not saving and investing. And when I really dug into why, there's 3 main reasons. The first, they didn't feel like they had enough money. They felt like they needed, $5,000, $10,000 in order to get started. Second is they didn't know where to start. So they wanted to do it, but they put it onto a list, or they felt it was very complicated. You have to go into a branch or see an advisor or map out the landscape to be able to do this, have to understand what the complicated fees are and how they work. So Moka tried to remove those barriers by making it frictionless and effortless through a 3-minute sign-up process directly from mobile application. You can be in line at Starbucks, and by the time you actually pay with your existing RBC credit card at the Starbucks transaction, we could round that transaction up for you, and you're already off saving and investing. So we do that all for a flat fee.
So help me a little bit understand the demographic that you tend to be serving.
Yeah, so we're unfortunately limited to a minimum age of 18 due to the fact that it is an investment account. We are working on innovative ways to be able to lower that age and make it more inclusive for everyone. But it's 18 and upwards. Our oldest customer on our platform, I think, is in his mid-80s, which was really cool to be able to see people from all walks of life and all income brackets in there. But typically what we're seeing is people in the early stages of their career. So couples looking to plan for their first purchase of a house, people who are getting their first jobs, typically between 24 and 32 is a majority of our consumer base. They can be high income earners, but not savers yet. So this technology platform is allowing them to be able to start saving and investing effortlessly and get started through that process. They start with spare change, to put on recurring deposits, they put in one-time boost, and they're off to the races.
Talk to me a little bit about how this helps one of your those who are using your service to learn more about how to have financial control and financial independence, because I got to believe that it would have been very instructive to me for a long time in my life to have an automated savings program. I got to tell you, but tell me a little bit about how that is working with your population.
It's a fantastic question. For us, it's all about the journey. A user gets started with something that is really catchy and they think it's pretty novel to get up and running with the spare change, but then they start going through and understanding their portfolio selection. So am I an aggressive, am I in a conservative account? What's this goal towards? They may have a question and reach out to one of our portfolio managers and be able to ask a different question through that, or go through and enable social responsible investing on our platform, and what's the impact that their dollar is having within the market. So for us, it's all about the journey of how they've gone through the product, and they learn through action rather than education. There's a ton of great content out there. It's just very difficult for people. Most people don't take the time to bring themselves up to speed, and when they do it in an app, they're learning piece by piece, and it's working out quite well.
So what I like about that is I'm a contextual learner. I can't learn all in one fell swoop. I have to learn while I do. And this sounds like the sort of thing that would have helped me a lot. Is that like that's sort of like just in time learning? Have
That's some
you?
fun learning. Absolutely. You and me are the same in that sense. I love to dig my hands into whatever project I'm working on and learn through action. And I think a lot of that comes out in the product experience that we have with Moka as well.
Great. Now I read something that you've launched in France recently.
We have. So we decided to go international. We want to represent Canada in the global fintech scale. I think there's a lot of great Canadian innovation that's here. And rather than going to the US, where we think that there's a largely mature fintech market with a lot of different service offerings, we found there's an opportunity to tackle Europe as our next market. Being from Montreal, we're a multilingual platform since day one. It's in our DNA to be multicultural and figure out the right way of building from a technology standpoint. So for us to tackle multiple European markets is a barrier to entry, but one that we're willing to tackle. So we're pretty excited about that.
That's great. And are you seeing, just out of interest, are you seeing any difference in the users in France and the users in Canada, or is it basically the same platform delivering the same sorts of services?
So when you think about fintech platforms and some of the things that go up and launching in a different jurisdiction, it's like you're starting your company all over again. You have to deal with the regulators in the local market. You're dealing with local payment infrastructures, local data access. So how do you connect to bank accounts to be able to manage that piece? So for us, we essentially started from scratch all over again and launched the product.
Wow.
Similar product experience, so the users get a same value proposition, but the back end is quite a lot of heavy lifting that's there. One of the challenges that we're facing is this concept around open banking, and we thought the data connections would be something that was a lot stronger than what we were seeing in the Canadian market, but there's definitely some challenges in open banking over in Europe. They're typically seen as the leaders in this industry, but for us, there's been limited transaction scope. So in Canada, the current open banking structure, you get to see everything. And in Europe, it's very limited in terms of just your payments, the time period associated with it, the poor banking APIs and documentations, and the incentive for reliability of those APIs are not there. So we've actually had a lot of operational challenges in terms of open banking there as well as in Canada here.
Well, that I have to tell you, so this is an important transition for me because I really hope that Canada can become a fast follower in the open banking world, that there's a lot of lessons we can learn from around the world. So tell me about it, some of the challenges that you're facing in Canada and how they compare to what you're facing in Europe, um, and how government might be more helpful in helping a Canadian enterprise grow and profit from here globally.
Absolutely. I think many people have heard the concept of open banking, if not open finance. It's this idea that the consumer ultimately owns their data, and it's portable and transferable and accessible without restriction. So that's the fundamental aspect of what we're trying to achieve with that. And then access to many fintech platforms is based off this concept of open banking or open finance. In Canada today, it's done through an unregulated data infrastructure. Now, unregulated doesn't mean poor. We have great companies like Plaid, which is a subsidiary of Visa, one of the world's most known, renowned financial institutions. You have players like Yodlee, who are publicly traded companies and that work directly with all the major financial institutions across the US and North America. You have players like Flinks that are great getting great traction and being invested in by companies like National Bank of Canada. So we have a pretty stable, unregulated data structure today. The problem with the current infrastructure is driven through credential-based authentication, meaning you have to sign up using your username and password that you typically use for your online banking. And there's some challenges in being able to do that. Some people may view that as not the most secure method of authentication as is there. So it's not unsecure, but it's not the securest way to be able to manage that. You think a lot of people recycle their passwords for different platforms. You should be using individual passwords the same way here. You should be having different authentication methods for fintechs to be able to access that information, because it gives you the right to be able to then revoke their access whenever you want as well. So if you have a strong authentication system, you have strong control over who has access to that information and who's performing what services for you. The second part is around reliability. Today, it's driven through essentially the same thing as logging onto the website and being able to manage the online view of your banking information. That's not always the most reliable way of doing that. The banks are not optimizing the way with the data aggregators to be able to have a fast connection. It provides a poor user experience for the users using the application. It provides an expensive experience for the banks who are managing all these servers and having to differentiate the data in between. And sometimes what the banks will do is they'll actually turn off the data connections or proactively block these connections, preventing innovation or Canadians from being able to access these fintech products. So there's probably a better way to be able to do that. And what some of the open banking, open finance regulations are trying to do is to legislate what's the best way to be able to continue to push innovation forward without sacrificing that user experience. And I think that's a really important piece. Is not many people realize the level of open banking we have today, and that we can move that into a legislated and regulated entity in Canada.
So, for me, you spent a bunch of time talking about under the hood kind of stuff in open banking and financial technology, but without all that stuff under the hood working well, it limits the ability of of you to maximize the user experience and ensure that you are reliably delivering the value that your users expect, and to reliably protect them in case they do want to make changes to which institution they're dealing with or who has access to their data. So these are really important under the hood issues that Canada's got to get right. Are they preventing you from moving ahead? I mean, you've only been around 3 years. It amazes me that, how much you've accomplished in a very short period of time. Are they preventing you from moving ahead? How do we help accelerate that? And then let's look to Europe and see where we might have some insights as to where we can start dominating from Canada.
That sounds fantastic. So from my perspective, it's not preventing us from moving ahead. As an entrepreneur, you have to work with the cards that you're dealt, and we definitely do our part to be able to build the best.
And that's why we need fintechs, because you just get her done, right? It's essential. Sorry, carry on.
So we don't, it doesn't prevent us, but it does provide sometimes a poor user experience on our side. So sometimes our users have to be patient with us as we work with the data aggregators to get back up and running. We've built technology that innovates on that side using multiple data aggregators to make that happen. And we've worked really well to be able to achieve this. Now, the dangers, if I can caution, if we regulate in a way that restricts access to what we already have, it has an opportunity to take one step back, right?
Yep.
And if we don't take in consideration what the current fintechs are using and how and it's not just the current fintechs, it's the financial institutions. National Bank of Canada uses data aggregation, RBC Ventures and all of their venture portfolio companies use Yodlee as a data aggregator as well. So there's already a thriving ecosystem here. And if we restrict with a very limited scope, then it prevents us to be able to use the existing technology we're using today to be able to do all of the things that we're doing. And the consumer is worse off because of it. So if you think about, you might have been asking what that may look like. Some of the ideas around what open banking can provide or what access to data can provide if consumers looking at it. I love to tell the story about vacation travel and Canadians. Typically, they spend about 4 hours trying to find a direct flight to go on vacation, not during COVID time, but pre-COVID. And they would try to find the best price, the direct flight with the airline that they're working with, the destination that they wanted, and they spend these 4 hours trying to find and optimize to save a couple $100, maybe less than $100 to be able to do that. But when it comes time to finding your mortgage, most Canadians go back to their primary financial institution and they just get the mortgage directly with them. If they had spent that same 4 hours negotiating, they'd save about 25 basis points, and on average for a Canadian, that's about $1,000 per year. They could pay for that vacation flight for the next 25 years if they had just spent the time focusing on the macro rather than the micro.
That's incredible. $1,000 after tax.
After tax, absolutely.
I would think as well, if there is a limitation in terms of even the data fields that you have access to from a financial institution, that would limit the ability for you to deliver the same value to customers. I mean, that's for me, it's not just about having reliable access, but reliable access to the data that empowers all of these more advanced systems.
So Moka users are empowered to be able to start saving and investing and have access to emergency fund that we actually saw during the beginning of the pandemic. A lot of our users were thankful for having a Moka account and actually had access to funds they may not have otherwise had access to. If we think about limiting those fields, the friction it adds from a consumer experience about this automated saving and investing platform would be quite troublesome. Part of it might have to do with identity verification and how do we actually get to know the customer, and it may require them to upload docs like void check, and who has those these days. It might require them to actually add in payment information. So for us, we're able to get those payment fields, your institution transit account numbers. That's the information that you need to be able to transfer money back and forth from an institution. Again, the information that's on your check, most people don't have that offhand. So to be able to automate those pieces of information, you're able to facilitate a service for a user that's better and stronger. One of the most interesting things I saw was the Ernst & Young 2019 Fintech report. So I'm going to drop a couple stats here that I think will be really helpful. But we saw Fintech adoption go from, in Canada, from 2017 to 2019, from 18% to over 50%. So over 50% of Canadians are using Fintech products in this country today. And it's because they have better rates or fees, they have ease of opening up accounts and be able to use these, or more innovative products and services. So those are the top three services or top three reasons that Canadians quote to be using these Fintech products. And by limiting the amount of scope that these data aggregators are able to provide us, it limits the functionality and the services that Canadians will have access to.
And that they obviously want.
That they obviously want, and creates a less financially inclusive ecosystem.
So Phil, as we wrap up, tell me a little bit about what you're learning from France that might provide us from your experience in Europe and getting started on that continent that might help us become fast followers in Canada. Because that's my dream, that we take what's going on around the world and we put our pedal to the metal and really understand how to manage whatever risks exist in the marketplace, how to streamline regulation reform so that we are making sure that we're protecting the stability of our banks, but leveraging that to take advantage of more global opportunities with our banks, and make sure that Canadian ingenuity the benefit of it is being maximized into export sales of intangibles, which is probably the biggest way to add to our productivity growth in this country. So tell me a little bit about what you're learning from your experience and what you've learned so far from your experience in France that we could benefit from. Give us the inside track.
Would love to. And without going too far under the hood, as you mentioned, the biggest takeaway in Europe is they built an ecosystem or an infrastructure around payments. And this idea of open banking was really around identifying transactional information and payments information to facilitate faster payments. Now, when you think about fintech in general, fintech is not limited to just payments or just transactional information. It's all of the information that you can see on your online banking portal, right? So think about insurance products, mortgage products, the different realm of things that you're able to do and empower the consumer to be able to do is encompassed through that. So if you think about the best way of doing so, I think the European landscape, what they did is they focused on how do we create a better payments infrastructure, and they wanted to be first movers, and they did really push the boundaries in terms of this idea that you own your data and the rights, and that's fundamental. But they focused so narrow in scope that they excluded all of the other fintech applications that were there. But now you're creating an ecosystem that doesn't allow the existing open banking infrastructure that's unregulated today through Visa, Plaid, Yodlee, and Flinks to be able to exist without going through this. So they're narrowing in scope, they're narrowing in functionality and innovation. And when you see that happen, Canadians, specifically the people I know in my network, want access to those awesome products and services. And the US products and services are so close together. We're moving so far beyond the bounds of currency with different crypto assets and different ways of banking online. You could see Canadian companies losing an advantage to American companies or other fintech innovators where the data is no longer held in Canada, the assets are no longer held in Canada. People are using other fintech products that you aren't able to regulate. And if you aren't able to regulate, you aren't able to protect the consumer from that perspective. So I think it's our job and our duty to be able to make sure that we foster the existing infrastructure that we have in place, be able to continue and expand on that, do it in a safe way that fosters innovation, but also protects the consumer and keeps innovation here in Canada. So that's what I'm really excited about.
To me, that's, by Canadians, about Canadians, for Canadians.
Absolutely.
And then deliver that to the world, because people trust us, and they should. We've earned that over time, and I think we're committed to delivering that. So delivering on Canadian values. Phil, I want to thank you. I'm really excited about what I've learned. I'm particularly excited by the fact that you're expanding in the delivery of your services in other geographies, because that's what I would love to see us doing more of in Canada. I think our financial services advantage is significant. And I wish you well in all you're doing. And again, thanks a ton.
Really appreciate the conversation and looking forward to seeing what the future of Canadian finance looks like.